miss me? I know you did. I started with a beautiful romantic song that is full of love and the long for New York. Nothing like it, almighty New York. Just go check it out. Nowhere's like New York. It is. It is very special. Not mentally challenged, but it's special. Oh. It is true. No, it's like it. Hello, everyone. I know you missed me. You didn't have to act all cool. Kareem and Abdul-Jabbar. How's everyone? I hope everyone is doing fine. I was asked by a very not very smart person. You know, I like it. You know how I love to surround myself with very mentally challenged people. I like that. You know, because it makes me feel smart. You know, maybe I'm mentally challenged too. Anyway, so I was asked by a nice gentleman about his username is a Greek is a Greek mythology name. He's trying to act like he's high society. You nobody. You ain't nobody. Anyway, God, stop horsing around, will you? Anyway, so he asked me why don't I look at the USD. I told him I look at the USD in times of medium to short-term change to see the liquidation mode. You know, I always look at the USD because, in my point of view, it is the ultimate safe haven trade. It's where mostly people go for it. Sometimes you have risk parity, where you have inverse relationship with the equity market and the bond market, but this is the real deal. This is the real McCoy. It's the USD. It's the real risk parity in my point of view. So the USD showed bullish movements. First of all, it's going for a C, ABC up, and it broke up to the upside from this high, this reactionary high. So it's in the breakout mode for this one. Second, it is above its 20-day moving average. This is always bullish, you know. Third, the MACD is in bullish crossover. The histogram in the positive territory, and you could check it out historically. The MACD gives good signals most of the times. Third, you could or fourth, you could always see the correlation between the market and the USD. The last time USD went below the 20-day moving average was when the equity market, the Dow, was breaking out this trading range. So there is no doubt in my mind, and I've never had any doubt in my mind, that there is a real correlation between USD and the market. That's why I brought the USD. So USD in the breakout mode and the ABC up, and we're gonna have 1-to-1, nice, nice Fibonacci extension, all the big things. So definitely there are some movements. So we cleared this thing out. I'm gonna have a long video today. You missed me, don't miss me, I don't care. Kareem and Abdul-Jabbar, you deserve better. So I'm doing it for yous. And the guy that trying to be funny and trying to be smart to have the Greek gods for username. How dare you? You ain't nobody. Anyway, so I did the USD. So let's go to the Dow Industrial. What's new? All right. You could always freeze and look at what I wrote here. It would give you an idea, but I'll talk about it now. So last time we talked about the Dow Industrial, I talked about the doji. The most important thing for trader, you're not gonna get rich out of this. So it takes the greed and the FOMO out. If you see an indecision Japanese candle, reversal candle, you just stay out. You didn't have to take it all, you know. So I talked about this candle. It was bullish and beautiful. It eclipsed and engulfed two trading days, which is not a trading days, two bullish candles, bullish harami, no confirmation, and bullish engulfment. So this is really good. But I didn't like the volume. It did not look like a flush. This should have been a flush. So what happened after that? Boom, a doji. A doji is not a good thing. It's indecision. So we would have been bullish when you clear this, when you clear the high of this day. But what happened? We'd have bearish engulfing, another indecision, and we have another bearish engulfing. So it qualified for bearish engulfing because we're trending. We're trending. So now we have one bearish candle, two bearish candles, three bearish candles. This is not good. So and plus, the price action found sellers at the 63, almost 63 Fibonacci retracements, and it's indicative of 1, 2, then 3. Sometimes you have 3 within a big, small C or whatever, you know. So, but most of the time, the three always very strong. So we talked about the candles. We talked about the Fibonacci extension. Now we talk about the very important thing, which is trading volume. The trading volume is the highest since April. So when was the other day? Boom, it was right here during the formation of this bullish wedge. And so it's significant. It shows a lot of people are just bailing out. That's why they went to the USD. These people, they did not go to other asset class. They went to USD. A lot of them. And also the stochastic is pointing to the downside, which is most of the times the second bearish crossover will go to at least the previous one. So this is the first, second. It made another low. This one was beautiful because it was a bullish divergence. It gave us the bottom in process. That's why I thought it was 5 waves of A. Usually the fifth wave, always you have the bullish divergence or bearish, whatever. So this one is an exception. The divergence is always an exception. That's why it catches my attention and a lot of traders' attention. So this one is definitely an exception. So this one is like that. See, boom, it tested the previous one. Plus, it did not reach the 50. The 50 it shows strength, so it did not reach it. So it would at least go to at least 26, which will take the price action lower. And plus, we are at the trend line. This trend line helped us here, and trapped people here. But the breakout point where the buyers gather helped to propel the price action up. So if this bad boy breaks down, it will attract a lot of sellers too. So this is for the Dow Industrial. The IWM is the same thing. Everything's intact. And this count even for the Dow assumes the B wave already concluded, and we going through a registration of C, which will show itself in the market, and you're gonna hear it in the news like a real sell-off if it happens. And the volume here is very strong, even though it's not really like the Dow, but it's very strong. It eclipsed the previous 2 trading days, but it did not make a lower low. It found buyers at that low. This is good. This is not bad. So that is why I posted a video today. I'm only gonna post videos whenever I feel like it. Whenever I feel I need to, I don't want to repeat myself. So I think, in conclusion, we have to be cautious. It's not a point for short selling. Nothing. I'm not asking for people to to establish short positions, but it's really not a friendly environment for the bulls. And we have everybody should dance, man. Come on, man. And for that, we're gonna enjoy ourselves. We're gonna have a good time. We're gonna love. We're gonna be prosperous. We're gonna be happy. Watch out for the EST, folks. Watch out for this bad boy. Everybody dance, and I love you guys. I love you.